All right, let's get into your picks. One of them I want to talk to you about. I want to start off with. It is Rocket Mortgage is how I think of it, ticker RKT. I want to ask you, I'm looking right here. Mortgage rates at over 6.5%. Why are you bullish on this stock right now when we continue to hear until those rates get down to closer to 5%, we're not going to see a lot of movement in the mortgage market?
Yeah, so I know that typically a Fed funds rate cut doesn't mean much as far as mortgages are concerned because it pegs to the 10-year more than anything, and that has been up, 4/10 basically at this point since September. But I'm looking at the fact that Rocket actually was able to do well in a bad interest rate environment for mortgages, right? If you think about the last couple of years while the Fed funds rate has been higher, they were actually, by comparison to their competitors, right, Loan Depot and United Wholesale, both had double-digit revenue declines. Rocket was up about 5% year over year last year. And so I just think if they were able to do that well in a bad environment for mortgages, with us being in an easing cycle, we can reasonably expect that Rocket is going to do fairly well going forward.
All right, in all fairness, the stock is up over 21% year to date, but I want to go back to their last earnings. They gave some guidance. So they had Q2 revenue of $1.3 billion, then they guided for revenue that could possibly be lower for the current quarter, $1.15 billion to $1.3 billion. I mean, aren't you concerned that they're not seeing the growth in their business?
Well, I think that one of the things that Rocket did, too, was it got a little bit more efficient, right? So it got defensive in its posturing. It got a little bit more efficient. And I think that maybe the guidance is setting up to actually have a decent beat. I think that maybe we're getting a little bit of, I hate to use the phrase, but sandbagging here, where we want to make sure that we have the opportunity to outperform. And so we're setting that guidance a little bit lower to set expectations on the floor.
All right, your other pick for us is PayPal. We're going to show the chart in just a second. One thing I do want to ask you, why PayPal? We've seen a bunch of upgrades of Affirm. People seem to be very bullish on Affirm. One analyst called it the new way to pay, or like basically this generation's American Express. Why are you going to PayPal instead?
Well, I think that, so for one thing, I think investors have been discounting just how impactful a CEO change can be, right? You teed it up that something like 30%, I think, is their year-to-date performance to this point. But most of the momentum in that name hasn't come until early August. So basically a full year after Alex Chriss took over. And so I think one of the things that's happening is we're getting a lot of a refresh inside of what has actually become a bit of an older brand in the fintech space. And so I just think that, for one thing, the momentum is going to continue as we continue to see just new changes and updates come, especially as far as the Venmo offering is concerned, that we really haven't heard very much new out of that name in a while.